Hello everybody and welcome to the latest Service Department News webinar. We're back after a short summer break and today we are going to be getting our crystal balls out and looking ahead to 2025. I've got a great panel of experts with me here today. And we're going to talk a bit about how we think the sector is going to look in 2025. My name's George Sell. I'm Editor-in-Chief of International Hospitality Media. We are an events organizer and a publisher of online B2B websites for the hospitality sector. Now, today's session is going to last an hour. We're going to have around about 45 minutes of discussion with the panel, and then there'll be around 15 minutes of Q&A at the end. We'd like to make it as interactive as possible, so if you have any questions, either at the end or arising throughout the discussion, please do submit them using the chat or the Q&A functions in Zoom. Everybody who's registered for the session will receive a recording via email in the next couple of days. So I've got a great panel here. I'm going to ask the guys to introduce themselves in turn. It's a truly international panel as well. We'll start in London with you, Ben. Welcome.
Thank you, George. My name's Ben Davis. I'm co-founder of Saxbury. We are an operational real estate agency, and we also specialise in development consultancy for developers and those that are interested in entering the service department sector, providing advice on full life cycle projects, from planning right through to operator search and investment.
Thanks, Ben. And Mark, good morning to you, I believe it is where you are.
It is good morning, yes, and good morning and good afternoon and good evening to all of you, depending on where you are. My name is Mark Skinner. I'm a partner with the Highland Group. We are a hotel consulting firm based in Atlanta. We consult on all types of hotels, give investment advice, and about 20 plus years ago, we started specializing in extended stay hotels, and we have published numerous reports on the segment and the service department segment over the last 20 odd years. Thank you.
Thanks, Mark. And Tom, good evening to you.
Good evening, almost good night. Thanks, thanks, George. So I'm the COO for International National Corporate Housing. I'm based in Australia, but was previously based in the UK for 8 years. National Corporate Housing, a global provider of corporate housing. We have 30 offices spanning 5 countries and have been in the space for, this is our 21st year.
Thanks, Tom. You will be able to see the LinkedIn profiles of all our panelists in the chat. So if you'd like to make contact with them and carry on the conversation later, then please do so. So let's kick off. And I'm going to ask you all each in turn, bearing in mind that we're thinking ahead to 2025, what do you think will be the long-term impacts of the pandemic on the sector? Obviously, there have been numerous short-term impacts as everybody's been scrambling to get through it, basically. But what do you think will be the main long-term impacts? Ben, perhaps you'd like to kick off with that one.
I guess as the real estate guy, I'll look at it from a property perspective first. Look, the resilience of the service department sector is widely documented. Apart hotels are now one of the fastest growing hospitality asset classes here in the UK. So landlords with vacancies, and particularly in declining asset classes like retail, perhaps offices, older offices, they have been calling us regularly for redevelopment advice and agency representation. So I expect really to see apart hotels appearing on the high street, and in particular in key business districts across the UK. And I imagine that probably by 2025, investment yields would have tightened to a point where the service department sector as a whole is considered an institutional grade asset class. You know, it still has some way to go, but the enthusiasm from all sectors, whether it's from landlords, pension funds and operators to really jump on board here at a you know, it's such an interesting asset class. I can imagine that this is really going to have a positive impact on investment yields.
Thanks, Ben. And Mark, what do you think from a US angle, particularly with regards to the extended stay hotel sector?
Well, I think one of the benefits will be that during 2020, new sources of demand got exposed to the product. Now that could be, a group of medical professionals that had to go temporarily to a hot spot to help with the health services there. And these are individuals, many of them probably won't even know what an extended stay hotel is until they went and stayed in one. And it was something of a default. They could go and stay there, and in the height of the lockdown, they could see the benefits of social distancing, particularly at the economy end, the ability to be able to cook, prepare meals in your rooms. At the time, you barely could go to a restaurant. So these new demand sources will realize the benefits there. One being that on a long-term stay, an extended stay hotel is a price buy at any price point compared to a traditional hotel of the same class. So I see new demand sources there being exposed, and that lifting the pool of demand going into the future. Thanks,
Mark. And finally, Tom, what's your take on that from you've kind of got a global overview and also a good handle on the distribution side. So what do you think are going to be the main implications?
I think Mark made some really valuable points there, that there are new clients that we're working with that we weren't working with prior to the pandemic that see the value in corporate housing or service apartments. And I think over the next 5 years, we'll see that continue to grow and more corporates and relocations or whatever the need may be start to work more and more with our industry and less with hotels. But I do see, as a side note to that, hotels starting to diversify some of their offerings to capture the extended stay market as one of the things. I think another thing that one of the long-term impacts of the sector that we see in the UK, but also in Asia Pacific and everywhere in the world, is the war on talent. A lot of people have moved out of the hospitality industry as the hospitality industry and service apartment industry was hit so hard. And they've moved into different sectors now, especially with the UK leaving the European Union. There's not a great deal of readily available talent. So we might see it harder to get really great people to offer the service that our clients need over the coming years.
Thanks, Tom. Ben, do you think we will see significant new entrants into the sector, whether that be investors, owners, or even new operating companies?
I think we already have. We've actually just seen also quite a shift. I mean, if you think about, if you cast your mind back kind of 12 months from now, when we're sort of in the middle of the start of the pandemic, if you like, unfortunately, a lot of operators, and let's face it, most UK service department operators have been asset light, rent to rent. A lot of the operators that were probably more than dabbling in leisure, so perhaps doing far too much leisure versus underpinning their occupancy with corporate stays, found themselves swimming without shorts, right? So they had, I think, so last year was a very difficult year for everybody. So given the fact that a massive amount of stock has been reduced from availability, and with landlords and developers now obviously being rightly so very cautious about leasing to service department companies because of the situation of non-payment of rent and various other things, it's prompted a new wave of investors and operators to enter the scene. And actually, last year was quite a good year for a lot of these opco propcos. So, an operation company that is a holdco, that is a property or investor all in one. So again, quite different to the past where it was always just leasing operators. And at Saxbury, we've been leasing buildings now to really strong operators across the country, and those that have been looking at the sector and saying, well, you know what, it's ripe for these serious investors to get into this asset class now that it's really established and here to stay. So yes, I think you're going to see a lot more different types of investors and operators coming in. I think also one other point I've noticed is lots of the operators now have serious investor backers. So whilst they're not your traditional opco propco developer and operator, actually many of the operators now are backed by institutional parties. So that is, they bought into a share of their business to fuel their expansion. These operators are then able to take leases or management contracts guaranteed to, you know, a serious entity, and that's really going to drive, you know, the amount of growth that you're going to see with new operators entering the scene here in London.
Mm-hmm. And Mark, in the extended stay space, we've obviously seen Extended Stay America recently acquired by you know, institutional powerhouses, and actually that is quite a good example of a company that does own a lot of its own inventory. But do you think we're likely to see more companies enter the space, more brands? Will some of the bigger hotel companies launch additional extended stay brands?
Yes, yes, and yes. I think it's already happening. I mean, obviously, the big transaction is Blackstone and Starwood Capital over ESA. I mean, they're actually old entrants re-entering, which has very good omens. If you look at the cap rate paid, and you know, they are two highly experienced investors, and they want more, so they can obviously see an upward trajectory. But personally, I have dealt with other private equity entities looking with interest in coming into the segment. I've had clients who've got hotel portfolios which didn't have extended stay or had very little representation, thinking, do we need to diversify and add some? The clients I have who have that in their portfolio already want more, because it has withstanded the pandemic far better than their other hotels. We've also seen other types of real estate asset classes looking to diversify and go into hotels, extended stay. There was a big apartment developer only a few days ago announced that they're targeting extended stay hotels. And then, of course, you get Sage Hospitality, a long-time hotel owner and management company, launched a new brand, an extended stay brand at the upper end, looking to capitalize and possibly move some of the extended stay business from their non-extended stay hotels to there, rather than let somebody else come in and take it. And yeah, I mean, I think that looks to continue for the foreseeable future. And brand-wise, you mentioned, let's look at Sonesta. Very, very big player. They'd been in the upscale extended stay with Sonesta Suites. They then took an acquisition and launched Sonesta Simply Suites, a mid-scale brand, predominantly conversion properties. So it's already happening, and there's more coming to that down the pipeline.
Sonesta is an interesting one, because they have rebadged a lot of properties that their parent company owned and taken them from some of the big hotel chains. Do you think there'll be more instances of new brands created like that that will provide, you know, serious competition for the big established hotel companies?
To the extent that there's assets that they can acquire and rebrand, yes. I mean, if you look at the change in market share in extended stay for Sonesta, it was exponential, essentially overnight. So they made a very big statement, and you know, that's been the way that they operate. Rather than build new, they go in to typically older assets that maybe have sizable pips coming if they were to stay with their existing brand. And they've done a super job at upgrading those and repositioning them. I see more of it. I think that companies are looking for quicker ways, you know, to establish themselves in the segment. Yeah,
thanks, Mark. Tom, as well as on the operator and owner side, we've also seen consolidation and M&A activity on the agency side. Your own company, National, acquired the agency business of Bridge Street. And just this week, we've seen Silverdor acquiring the apartment service. What do you think we're likely to see in the agency landscape by 2025? Are we going to see more of this consolidation? Are we going to see new entrants?
Yeah, I think we're going to see, I don't think we're at the end of the consolidation of the agency or the solutions business. I think we're probably going to see more. people that were in just the solution space were hit very hard with COVID. And although it's a very low risk business because you're not carrying inventory and you don't have the large overheads, there are still overheads that you need to pay, and it's a very small margin business. So I think we'll continue to see M&A in the space. We see some of the bigger players getting larger through acquisition. A lot of that acquisition is through acquiring those clients. And I think we'll see, again, more acquisition, but we're definitely going to see new entrants into the solution space as well. I think one of our big challenges now, not challenges, but opportunities, is technology. And it has been for the last few years, is the technology race. And so a lot of the privately funded and backed companies will bring new technology that will challenge the solution space. So there'll definitely be more M&A over the years to come.
Mm-hmm. I think at the time of the bridge deal, Tom Atchison did say that there were potentially more acquisitions in the pipeline for you guys. Do you think that's still the case?
Yeah, we've closed a few since Bridge Street, probably most notably in the US. I think, strangely, and unlike many companies, during COVID has been, in terms of our M&A and acquisition activity, the busiest time for us, because a lot of opportunity has arisen. So since the Bridge Street acquisition, we've completed a few more acquisitions in the US, and we are completing one in Europe that will be closing incredibly soon. So I think from National's perspective, we were fortunate that we were prepared, I suppose, as you can be for COVID. We're a fairly liquid organisation that was running well, and a lot of opportunity has presented itself for us to grow into new markets inorganically through acquisition and give us new opportunities in these geographies. And so we've been able to capitalise on those. But it's not just us. We know that there are many organisations looking to grow through acquisition. So we'll see more over the next year or two.
There seems to be an increasingly polarized way of thinking in the agency space about the agent operator hybrid. So you've had obviously Oakwood move purely into operations. The Silver Door statement this week was outlining the reasons why they didn't acquire room space, the operating part of the apartment service. How do you see that playing out, and what are the pros and cons of each?
Yeah, I think from our space, there's the pros probably outweigh the cons, in that when you separate the two, really anyone who's selling a solution, whether it's us or anyone out there, is selling an unbiased solution model. So where we're giving to our booker the best apartment in the best area, the best available rate, rather than our own inventory. And there's two schools of thought on that, because if we're pushing our own inventory because we're seeing what everyone else is bidding, and we have the opportunity to do that at, say, a lower cost, well, that could be a benefit to the booker or to the company. The other school of thought, well, it's still not a truly biased blind bid sort of platform. So I think what we will see is the separation in years to come. It's always asked of us, it's always pushed, how do we see that you are giving us unbiased options everywhere that we go? Our clients talk about it more and more and more. I think we might see companies that are doing both. So the solution and the property company rebrand. So they'll be owned by the same parent, but they'll give the appearance of being unbiased.
Thanks, Tom. Ben, did you want to come in on that?
Well, I guess on M&A, I think that last year I was frequently contacted by, really great service department operators asking if we knew of firms that might be looking to, exit, throw in the towel, so to speak. The fact is, in the UK, the majority of service department operators, they operate under a rent-to-rent model. So in many cases, there's little point in an established player acquiring a smaller rival when the market entry barriers are quite low. Mm-hmm. That service department operator needs to have a very clearly defined patch that nobody else is in, or even better still, existing clients that are signed up to use only them. But in reality, that's rarely ever the case. I think more likely that you're probably going to see some of the UK and European apart hotel brands, by 2025, having got to such a stage where they have grown, and they have purpose-built apartment hotels across the country and throughout Europe. And it's at that point they suddenly become interesting for an exit with partners like Accor. Because there's obviously a clear reason why the big hotel brands like Accor and IHG are so big. Is they more often than not wait for a new area, particularly in apart hotels, to a brand to grow to such a stage that it would be complementary to their portfolio, as in the Ennismore and Accor deal. I wouldn't be surprised if you saw some of the really strong growing UK players having by 2025 got to a stage of 5, 6, 7 apart hotels, and one of the big hoteliers trying to snap them up.
Yeah. Ben, as you are the self-styled real estate guy here, how do you see the physical product changing by 2025? And let's go from apart hotels right through serviced apartments and extended stay hotels, if that's okay.
How's it going to change? I guess technology plays the biggest part, and anything that any changes that we try and bake in now through planning and designing the perfect building can ultimately be changed in a heartbeat depending on who's running it and the technology. So I'd written down some notes prior to this about how we imagine whether it's cluster flats or individual flats or purpose-built apartment hotels, and then I saw this article literally just this morning, and maybe I was a bit late, but about a joint venture between RealPage, the software, software of choice, if you like, for real estate companies, and Airbnb. And I kind of shivered for a moment, and I think, well, what this technology will be doing, and it's not to give them too much free airtime here, but technology like that will effectively allow build-to-rent companies, so multifamily owners and residents, to participate and profit from home sharing. Now, that will be a game changer for build-to-rent companies and investors. It has the potential to suddenly flood the market with hundreds of brand new, high-quality stock, and better still, the firm that's promoting or offering that, the build-to-rent company, doesn't have a rent to pay. This is just filling voids, so to speak. So I think that probably any time between now and the next few years, you're going to see a big drive which is hospitality leaders or people like Airbnb and technology firms trying to latch on to the explosive growth of BTR developments, because I think, putting it bluntly, we want to have apartment hotels across the country in all of the key business cities. All of the operators want to be in the key business cities, but it just doesn't stack up to build a brand new apartment hotel for every operator, because the yields aren't sharp enough yet. The build costs are what they are. It only works in certain cities. So I think that there is a genuine opportunity to take purpose-built build-to-rent accommodation and multifamily properties, very much like a firm like maybe National or Oakwood would do in their home territories, where they lease it or they operate it on a needs basis rather than having to secure a lease. So I think that I guess, in short, I would say we're going to see so much more build-to-rent activity here in the UK over the next few years that I think it's only natural that the service department operators or technology providers like this Migo will come along and be able to monetize that. The question is, in practice, whether or not they can be a good hospitality provider, because it takes a lot more to operating a service department than just changing the beds. And I think a lot of developers and landlords are sometimes, they're just not wise to that. They're a little bit naive. They think that operators are not really doing very much apart from putting it on booking.com.
We're already starting to see an overlap in length of stay with build to rent and apart hotels. I think it's Fizzy Living now offers a minimum tenancy of 3 months, which is ideal for project work. So do you think we could ever get to the stage where the differentiation between an apart hotel operator and a build to rent operator is barely there anymore, and they're serving?
No, I don't think so. No, I don't think so. I think that there is definitely, I guess the obvious benefit, as far as I'm concerned, of a build-to-rent, professional build-to-rent company offering short-term lets is for relocating employees. Because if you look at the relocation journey for an employee, normally it is, let's find a service department for 30 days or 60 days, and then let's find our permanent home. And previously that permanent home would have been a purchase. But, more and more, it's less likely that they're buying a home in that region. So actually, they want to move the family into a long-term furnished rental. So if a build-to-rent operator is offering a short let and a long let, well, happy days, right? That makes the relocation company's life easier. But again, back to service and account management, these build-to-rent companies frankly, they haven't got a clue about what service department operators do, not a clue. And I think you can busk it for a while, but I think when you're dealing with employee relocation programs with Accenture and PwC and all these great firms, they will be steering their business back to the professional operators.
Thanks, Ben. Just touching briefly back on the physical product. On the apart hotel side, we have seen increasingly smaller units and more and varied communal space. Is that a trend that's going to continue, or have we reached the limit of how small a unit people are going to put up with for more than a night or two?
Well, I mean, I could let somebody else answer this, but I would say that the units are getting smaller and smaller and smaller in certain locations. But there comes a point, and it's probably below 22 square meters. If there comes a point where you can't call it a service department. I mean, a service department is a type of use for a property, right? It's not a property itself. So if you're going to stick someone in a 17 square meter box in the kitchenette in the corner and expect that somebody will be happy staying there for longer than 3 nights, well, I just can't see it happening. So yes, there's always a demand from developers and investors to salami slice the development down to, down to these little boxes that produce great income. And there might be operators that might go along for the ride, but maybe these are operators that don't really know themselves or their customers.
Thanks, Ben. Mark, in the States, in the extended stay market, obviously, apart from a few select city centres, land prices are generally cheaper and unit sizes are bigger. But is that changing? How is the physical product evolving over there?
Well, I don't think there's much of a change in room size necessarily going smaller. I mean, construction costs, I'm sure in Europe and elsewhere have gone up. They went up a lot here, which would push towards smaller room sizes and getting more, per site. But, that really hasn't happened. And, the price of lumber spiked and has now come way down. So that's going to settle down. What I do see here, from the economy end of extended stay, I think the biggest physical changes will just be an improved technology, because there's not much more that you can do with an economy room than there is today. I mean, they're not going to suddenly expand them and put an office in there. It's not going to happen. I think on the higher priced end, though, I think because the rooms are already relatively large, a studio unit in an upscale extended stay hotel will be bigger than a standard room in most traditional hotels. And if you look at traditional hotels, one of the things they've tried to do during the pandemic is get business from people that have been coming into an area, but instead of going into the office where they were visiting as they used to do, they would work actually in the hotel, because in some cases they physically couldn't go into the office, and then perhaps have meetings elsewhere in the local area, but not in the office where they weren't allowed. So that's always been there. I see that the upscale extended stay hotels will put greater emphasis. The product is essentially already there to be able to work in your room with some space. You could even, in the proper 1-bedroom units, you can hold a small meeting actually in the living area and have the bedroom closed off. That has been something that the hotels have done for many, many years. I see them upping the marketing and maybe changing the room mix. I mean, the trend here has been going to more studios and less of the bigger rooms. I don't necessarily see that continuing. I think they'll take it, especially in the upscale, they'll take a fresh look at that because the demands have somewhat changed.
Yeah, we had an urban living webinar yesterday about the apartment and hotel room of the future, and one of the threads that we discussed was zoning of rooms. So there were very clearly demarcated work zones, living zones, cooking zones and stuff. Is that something that is coming into unit design more and more, or you're suggesting that might always have been there in the US product?
Well, it's been there just simply because of the space of the room. And if you've got a true one bedroom, you could effectively, your living and kitchen area, you can turn into an office totally separate from the bedroom, completely. That physically has been here. Although I would say that the percentage of one bedroom and indeed two bedroom units in a typical hotel has been going down and down and down. One reason because of the construction costs. I think that they'll take a fresh look at that now because it's more difficult to do that in a studio where you've got your kitchen and your bed and your clothes and everything all in the same room. I think that they may look at the room mix now and tweak it where appropriate.
Yeah. Mark, while I've got you there, we've got a question here from Matthew McAleer from Choice Hotels. He says, how does the panel view the opportunity in converting traditional hotels into extended stay hotels, especially given the significant undersupply relative to demand in certain markets? Do you want to kick off with that one, Mark, and then we'll
yeah, I mean, it has happened before, and there's a lot more interest in doing it. You know, for no other reason, it enables you to get an extended stay product to market quicker than building a new one from ground up. So there may also be some opportunities with hotels that are currently distressed. You know, maybe it's time to reposition that hotel to somewhere which in certain areas is somewhat undersupplied, because still in the United States, there are more extended stay guests in traditional hotels than there are in extended stay hotels today. The absolute number is larger.
Yeah. Ben, is that a trend that you see happening in Europe, traditional hotels being converted into extended stay? I guess it depends to a large degree on the footprint of the building, because it's pretty costly to put kitchens into rooms if they're not already there.
It is costly, but I think, yeah, so in answer to that, yes, definitely, it's already happening. I mean, you've seen, you know, Vision Apartments over in, you know, the Swiss company went into, was it Bucharest, bought that, was it a Radisson or a Marriott? I can't remember, but they bought a hotel with the, you know, with the idea to convert that to an apart hotel. And like even here in the UK, I mean, there's a small operator called Your Apartment who are headquartered in Bristol, and they've just announced an agreement where they took a small B&B hotel in Bristol, and they'll be converting that into studios, apartments. Yes, it does cost a lot of money to put the kitchens in, but if you buy them right, then, you know, it doesn't have to. I think crucially what makes this work is traditionally hotels in the UK operate under operator, investor and management contract and brand that involves fees. So there's no income guarantee whatsoever. The service department sector, as it's a nascent sector and it's, you know, probably follows more like how it works in Germany, you get a master lease agreement with the majority of the operators. So if you're a landlord and you're considering, you know, all of the capex involved in converting your 28 square meter hotel bedroom into a studio apartment, and you're weighing up on balance the difference, I think probably the reality is you'll get a sharper yield cap rate on the building, because you're going to have a leased up 25-year lease agreement as opposed to a management contract. So you've got an income guarantee from day one. So that's probably what it's all about. So I would say that, you know, hotels across the country are, that are underperforming, or where, you know, where landlords are seriously looking at these brand fees that they pay out and trying to work out if they're getting good value. I think that is definitely the low-hanging fruit for the operators. But of course, there isn't service department and extended stay demand nationwide. Or there might be, but it's not valuable in every city. You know, in truth, unless you have a project and you're I don't know, maybe like National Corporate Housing, for example, I imagine, you know, their business is is really all about, project work and long stays and corporate demand in sometimes far-flung destinations. But most service department operators want to be in the top 5 cities. So if you have a hotel in Loughborough, it doesn't necessarily mean it's going to convert well to an apart hotel. So it's location specific, really.
Yeah, thanks, Ben. Tom, one of the attractions of service departments over the pandemic was the low touch element. There was, especially with the advent of technology, it meant that customers could go through their entire journey without having to interact with anybody. And I think a lot of people have got used to that way of doing things. Do you think that's here to stay, or do you think people will want more service levels as we come out of the pandemic finally?
Yeah, I think it's an interesting one, because we've kind of gone to this touchless, keyless, very kind of like sterile service. And I think we're already seeing people expecting pre-COVID levels of service now. And from where I sit, and this ties to the conversation before about like 1 and 2 bedrooms. Right now, people want more space. So right now, people are asking for desks. They want bigger apartments because they might want to work from there. But I think if we look at 2025, COVID will start to become, hopefully, a more distant memory, and people will want to start to engage together. And so I think we can't be blindsided by bigger apartments to have desks in there versus the need to have like sharing working spaces, with lots of Gen Zs coming through. They need to engage with each other and not to be locked in rooms. So I think we're going to be touchless and keyless and sterile, I think, for a little bit longer, but travellers are going to expect pre-COVID levels of service again pretty soon. High touch. I think we'll see hopefully some more globalized certification for operators, so people have peace of mind when they travel as well.
Tom, have you seen any trends in length of stay among your clientele that you think are going to continue through to 2025?
Yeah, it's hard, to know with a crystal ball, when we come out of this, what's going to happen to the length of stay. Right now there's a lot of a lack of supply of corporate housing in various places in the world, especially those places that are returning high demand corporate travel places, where businesses are bringing people back in, and there is a real shortage of corporate housing. So we're using a lot of extended stay hotels to fill that need. And so we're seeing that we could be putting up to 30 nights in an extended stay hotel. We're still looking for the extended stay corporate housing. It's there. It's for us, and looking at our data, it hasn't been as long as it was pre-pandemic. Our average length of stay, it definitely has been shorter. A lot of relocations are trying to get their travellers into their permanent accommodation, whether that's a permanent rental or a purchased home as quickly as possible. And to Ben's point on the build to rent, there's a lot of opportunities in the build to rent space now, and partnerships where a company like ours or any of the operators out there that can support on that interim stay, but also work with that build to rent on that extended stay as well. So I think we'll, at the moment, probably for the next 12 months, we'll still see shorter stays. But as especially consultancy and those industry sectors that need to be on site for project-based work start to pick up again, it will increase again.
Mm. And as the demands of the business traveller changes, how do you see the distribution landscape changing with that? I'm thinking particularly about the role of TMCs and the specialist agents.
I think we'll see more platforms, more aggregators come into the market. There's a lot of opportunity there. TMCs will always look for automation, self-service, online, real-time, quick, because TMCs are used to booking hotels and being able to do all that very, very quickly for their clients and get confirmations back very, very quickly. And so I think we'll see more of that demand grow from the TMC space. But from the specialist side, I think looking at mobility now, and mobility buyers and travel buyers, they're demanding much more of a consultative approach. Is when companies are thinking about their duty of care program, it's not necessarily a click here now and confirm. It's I want to know that you've got protocols in place to ensure my guest safety, because they're going to be there for 30 nights and, you know, and what's happening. So I think we'll see in the TMC space, definitely automation, self-service, online, real time for that shorter stay, but longer stay. I think it's going to be here for a while in mobility, and travelers is a far more consultative and solutions approach.
Yeah, okay, thanks, Tom. Mark, do you think the extended stay and service department sector will capture more leisure business by 2025? And if so, how do you think is the best way for it to do that?
I think it will, because it already has, and I think it will continue. If you look at it, in 2010, extended stay hotels in the US had 9% of total hotel demand. Just with the natural increase with faster supply growth, more demand sources and so forth, that increased to 10.5% by 2019, and it was 8% of all hotel revenues. 2020, that 10.5 went to 14% of demand and 11.5% of revenues. The biggest increase, well, the only increase, if you like, in 2020 in travel segments was in leisure. So they already have done. And again, to my earlier comment at the beginning about new demand sources, those very well might be people that were sent to extended stay hotels on business by default and have now suddenly seen, well, wait a minute, this is actually a good, I didn't know this product existed. I could come with my kids on vacation and say, you know the story. So yes, I do think that it will continue to capture a bigger share of the leisure market. And you know, how they do it will be marketing, emphasizing the benefits of the extended stay, you know, more space for less, discounts on longer stay, and now possibly emphasizing, you know, the social distancing aspect of it, that you are in a hotel which doesn't have, you know, fleets of bellmen wanting to carry your luggage up and get in your way. So I think the answer is yes, it already has, and it will continue.
Yeah. The fleets of bellmen brings us onto an interesting question here from Frederick Huben, who asks if you see a future for luxury extended stay hotels. I think I'm right in saying that it's the economy end of the market that's seen the most growth over the pandemic. So what's the future for luxury extended stay?
You want me to take that?
Yes, please, Mark. Yeah.
Picture is switched to Ben on my screen. Again, a very bright future. I mean, if only that it's incredibly undersupplied in the luxury end, and in the US, it's very much confined to key gateway markets, and there's a lot more opportunity there. So I both see that yes, as developing because it's undersupplied, but also persons in the luxury end of the market in traditional hotels. They're not necessarily price driven to go to an extended stay. At the very top end of the market, I mean, it doesn't matter to them. They are unlikely to be going to shift so they can cook in their rooms either. It tends to not happen at the very top end. But in terms of a product, once again, that you're a home away from home, you are in your own space, not with a lot of other hotel guests, other employees in hotel employees in public areas. Yeah, I do see that. I see that mindset helping.
Thanks, Mark. Ben, do you want to come in and talk about the leisure piece?
Yeah, I think, so I guess I agree to a point with you, Mark. I think, look, as for luxury, these guests are not affected by price, but when I think about service departments, and if I were to ask somebody on the street, what's a service department? You know, most people will tell me, is it Airbnb? As in, they haven't quite worked out the difference between online travel agency and the provision of stock. So given where we are with now this general awareness about an alternative to staying in a hotel, and you can thank Airbnb for that if nothing else. up until this point, you would say that a lot of the bookers on Airbnb would have been budget experience seekers. And I've stayed using Airbnb many times all over the world, and I've had a great experience. Would I have used it for business? Probably not. Would I have used it if I was looking for a luxury experience? Definitely not. And now with professional service departments, with apartment hotels, and I guess with the acknowledgement that the general public is switched on to this alternative to staying in a hotel, I think we will see more luxury product because, you know, there are still so many people I've talked to, you know, many different walks of life that would never have even contemplated booking on Airbnb because they didn't like the idea of staying in somebody else's home. But if it's a professional hotel-like product, I mean, you only have to look at Abu Dhabi and Qatar and, you know, the mass expansion of apartment hotels, where actually that market, it's not a price point. It is about having somewhere where we can have the whole family and staff, if necessary, come and live with us. Now, we'll never get to the stage in the UK, and certainly in these older cities like London, where you have that prolific development. But I do think that there's definitely a place for it. And you only have to look at Cheval in central London, where they have a completely unique offering of anything from studios through to 3-bedroom, very luxury homes. So yes, we do already have it here, don't we? You know, it's already here. It's just that it's confined to the super rich areas.
Ben, I want to stay with you a minute. We've got a question here from Jose Ventura. And he is asking how the panel views the entry of digital management companies like Journey, Sonder, and Numa in this segment. And are they a trend for existing operators to change their approach?
Well, hello, Jose. Very nice to hear from you. Well, it depends on who you're talking to, really. I mean, we can extol the benefits of management and excellent brands and technology and really all of those wonderful things up in the ante when it comes to the provision of stock. But really, what it comes down to is the landlord prepared to accept a contract that provides no guarantee of income? And if the answer is yes, and normally the answer is yes when they want to have skin in the game, and they want to be able to keep all of the profit minus any operational costs, then your answer is yes. The introduction of these brands that are, you know, providing really significantly higher above net returns, companies like Journey and the like, then yes, it can work. But I'm at the sharp end as a real estate guy, and let's just say 9 out of 10 conversations I have with the landlord are, we're looking to build a property and we need an income guarantee. So if you're going to provide an income guarantee, great. And if you're not, then this is the provision of the hoteliers. You know, this is nothing more than, shall we say, IHG have been offering for the last 30 years. You know, apart from with technology. So it's not, so don't get me wrong, it's not to downplay their offering, but it's just to say there are a huge amount of barriers and multiple challenges to be able to finalize a contract between a management company and a private landlord.
Thanks, Ben. I'd like to move on and talk about sustainability and to what extent it's going to become a key driver in how this industry operates. Tom, could we start with you and maybe talk about from the demand side? Is it more increasingly important to your clients?
Yeah, absolutely. It's definitely been one of those subjects that gets talked a lot, because our clients are looking to us to support them achieve their corporate initiatives in terms of sustainability. So what are we doing, you know, to support them getting there? So they're looking for full transparency around things like green certifications, any formalized accreditations that we've got in sustainability. DEI is definitely a subject of a lot of conversations now. So sustainability is definitely a driver of a lot of discussions now. I think there's a lot of opportunity for us as an industry to become more sustainable. So the very simple things like we've seen some airlines do in the last year, which is remove plastics, look at carbon footprint reductions and offsets, food waste, partner with food banks and the like that. But we are seeing now that a lot of the large corporates that we work with, they have very, very aggressive timelines to achieve their corporate sustainability initiatives, and they're pushing down on their suppliers to support them getting there.
Are you already seeing some customers inquiring about let's say the energy efficiency qualities of properties and things like that before they book? Is it a deciding factor yet? I'm pretty sure it will be, but has that already started?
It is, and it's a difficult thing as an aggregator or as a solutions provider, because if we've got someone that's booking in every corner of the globe, we can't give them an energy rating of every property that they use, and certainly in far-flung corners that just doesn't exist. So we've got to be creative in how we support them getting that and putting together a program for them that meets their needs. So rather than ask for certifications, we may have a minimum expectation that we ask our suppliers to agree or to adhere to in our service agreements. And so we will ask for certain things that they meet and they will sign off on. And if there's certain elements that they can't meet, whether it be certifications or the types of products that are used or what they do, then we'll feed that back to our clients. But it is being asked of us, what are we putting in place for our network to make sure our network, and so we're kind of feeding it down the supply chain.
Thanks,
George, I was going to just chip in there and just say that, the operators, more often than not, many of the service department operators, they work with what they've got, meaning that, if the building is, if the building is not energy efficient, then they have to do their level best to up the ante with respect to their, reducing their carbon footprint in operations. But, lots of the new brands, there are lots of new brands here in the UK, and many of them that are really paying close attention to sustainability, but really from the build. So, operators like Room 2, for example, they're an owner operator. Primarily, they've got an apartment hotel in Chiswick, which will be opening probably later on in the year. I mean, I've been down to the bowels of that building, and they've ensured that from every aspect of that building can be operated sustainably. New operators like Beyond Apartments, we found them a building in central London just recently, a very energy efficient building, but in particular the operations, it's everything from the reducing of making sure that the cleaning is reduced down to the minimum, the necessities, but also the cleaning products that they use, and all manner of things, and making sure that all the way down their supply chain that they have sustainable partners that they work with. The other thing is, back to, I guess, this point that I made about opportunities to convert declining asset classes to something more defensive, like service departments. Well, that in itself is a sustainable conversion. If you're not having to build the carbon, emissions involved in building a 200-bedroom hotel from ground up, including a knockdown of a building, you can't downplay that versus converting a declining asset class and filling that with rooms. So I guess there are opportunities to be had, but more often than not, the operator who's asset light really only has sway when it comes to the actual operations.
Mm. And in terms of the new projects that you're seeing, is there an evolution in terms of the way the buildings are constructed? Are they more energy efficient? Is this planning driven, or is this being driven by the investment community? Because ESG is such a massive driver now.
Well, I think each party is leaning on each other for support and to be pushed or nudged in the right direction. So yes, there might be a planning, but more likely it is perhaps it begins with an operator wanting the building to be sustainable, a developer wanting to produce it as cheaply as possible, but knowing that they won't get the rent or the terms that they desire if they don't deliver something that is at least meeting the criteria of the operator in sustainability. And then I guess in a pre-planning scenario, if a landlord can approach the planning department asking for planning to build a apartment hotel, they have an operator lease signed and the ESG credentials are off the chart, well, you're more likely to get planning over the other asset class that cannot tick those boxes. And of course, cities up and down the country, they have to do what they can to very quickly. And to Tom's point, everybody's now pushing on this sustainability piece. There isn't enough stock. There are barely enough operators that are answering that call. So I think that there's certainly a big movement. And me in the real estate side of things, I'm seeing it pretty much every day. Lots of discussions about it. How do we get to this point where you can have a reasonably priced, sustainable build that still makes sense in terms of rent to an operator? Because ultimately it's all controlled by the market dynamics on what a guest will pay. And I don't really see lots and lots of individual guests crying out for sustainable products, perhaps on Instagram, but when it comes down to how much it costs, you know, it's the age-old thing, isn't it?
Yeah, yeah. Mark, is sustainability and ESG something that's being talked about in the sector in the US?
It is, and it's growing. I don't see it here in a big way being mandated by local municipalities in terms of their building codes across the US, but it's likely to gain traction because of the need to conserve energy. I mean, for instance, I just stayed in an upscale extended stay hotel, and they had all the energy efficient rooms, whereas if you leave the room without taking your key out of the slot near there, all the lights go out. And I think, the air conditioning is controlled. I think this may well have been, it was in California, which is probably the most likely state to mandate something like that. But I think at that point, that was the operator looking to save on expenses. And I had a client many years ago who was right at the forefront of that and had unusually low utility bills, but he'd done it voluntarily, from a pure business decision. I see that, and then I see gradually local communities, municipalities enacting it through their building codes. And the same with, the low flush toilets that have become very, very prevalent. There will be more and more of that.
Yeah, thanks, Mark. Sadly, we're coming to the end of our hour. It's been a great session, and there's plenty more that we can talk about. Just need to show you guys a couple of quick slides before we sign off. Just going to share my screen. So next month, we are going back to face-to-face events, and we're launching a new event called the Urban Living Festival, which is taking place on the 26th and 27th of October at Tobacco Dock in London. And a lot of what we've spoken about today will be discussed there. And the event's really focusing on the convergence of hospitality and real estate asset classes. We've got a terrific cast of sponsors, media partners and speakers there. So it'll be great to see a lot of you there. You can find out more about that in the chat. There's some links there. And picking up on our last topic, the next Service Department News webinar will be on September the 30th. And it's about why sustainability isn't being talked about in this sector. We've just kind of alluded to the fact that it's starting to happen, but compared with other asset classes, I think we're still quite a long way behind. The link to register for that should be in the chat too. So while we haven't been able to do live events, we have been doing webinars here at IHM, quite a few of them in fact, and we're just going to give you a very quick recap here.
Hello.
Good afternoon.
Hello.
Good afternoon.
Well, good afternoon, everybody.
And welcome to the Trailblazer
Service Department News
Rockstars.
Urban Living Live
Engage.
Urban Living webinar series.
I think you have to tell the right story to the right people via the right people is really, really key in the right place.
Because we are all in the same, in the same boat. We want to make this work.
When you take away that personal contact, it's a problem.
Through the concept development, through the architecture, through the design, through the experience.
So although it's a growing sector, there's still huge scope for it to evolve even further.
So if you're interested in sponsoring any of our events or our webinars, please get in touch with my colleague Katie. You can see her details on the screen there, and I think they're also in the chat. Thanks for watching today. Thanks ever so much to Mark, to Tom and to Ben for their insights. I think it was a fascinating session. Do give us a follow on any of the social media channels you can see at the bottom there. Now, there was a lot of information in the chat today, LinkedIn profiles and various other bits of information. So we are just going to leave the chat and the session open for 2 or 3 minutes, so you can catch up with that in case you need to make any notes. Enjoy the rest of your days. Thanks to the panel, and good night, Tom. Have a good day, Mark, and see you soon, Ben. Thanks for watching, everyone.
All right. Thank you, everyone. Thank you, George.